Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about MAANSHAN Iron interim report. MAANSHAN Iron and Steel Company Limited offers a diverse range of businesses and services across various industries. The company's primary products include iron and steel products, steel plates, hot and cold-rolled thin plates, galvanized plates, coal coating plates, medium plates, section steel products, H-shaped steel, medium-shaped steel, high-speed wire rod, and hot-rolled reinforcing steel products, train wheels and wheel rims. The company also engages in ferrous metallurgy production and distribution, screw-threaded steels, round and section steels, angle and deformed steels, wires and rods production and distribution, iron ore fines and scrap steel import, export, and sale, metallurgy and extended processing of iron and steel products, coke, ammonium sulfate, and coal coke, chemical products production, and sale, metallic product production and distribution, rail equipment design, research and development, manufacture, maintenance, and sale, rail wheels, axles, wheel sets, bogies, steel product trading, pig iron trading, investment and trading businesses. The MAANSHAN Iron stock price has skyrocketed by approximately 168.13% in the past year due to several key factors. A positive industry outlook and policy support from the Chinese government have driven the rally, with expectations of accelerated supply-side reforms and a push against internal competition. The steel industry's steady growth work plan, released in September 2025, has also contributed to the surge. Additionally, new construction policy support has been favorable for MAANSHAN Iron and Steel, with previous initiatives already positively impacting the stock. Surging industry profits and capacity management have also played a significant role, with the company reporting a 60% increase in total profit during the first half of the year. Improved half-year earnings have further boosted investor confidence, with statutory losses per share being 83% smaller than predicted. The company is expected to become profitable in 2025, with revenues forecast to exhibit 3.1% annualized growth by the end of the year. These factors combined have contributed to the significant increase in MAANSHAN Iron's stock price over the past year. The primary drivers of revenue growth or decline can be identified from the financial summary. On the growth side, key contributors include companies such as Ma Steel Sihu, Anhui Xinchuang Energy Saving and Environmental Protection Science and Technology Co., Limited, and BAOW Group Finance Co., Ltd., that experienced significant increases in sales. The 50.3% increase in sales by Anhui Xinchuang Energy Saving and Environmental Protection Science and Technology Co., Limited, is particularly noteworthy. On the decline side, key contributors include companies such as Ma Steel, Wuhu, MG Trading, and Ma Steel, Yangzhou, Processing that experienced significant decreases in revenue. The 12.7% decline in sales of steel products and the 11.1% decline in mainland China revenue are also notable. Overall, these drivers suggest that revenue growth is being driven by a mix of company-specific performance and macroeconomic factors, while revenue decline is being driven by a combination of industry-wide trends and company-specific challenges. Net income and profit margins. A shift in fortune. The financial summary reveals a significant turnaround in the company's net income and profit margins. Net income, which was previously in the red with a loss of RMB 1,311,895,617, transformed into a profit of RMB 40,219,785. This represents an increase of 22% year-on-year and 19.7% from June 2024 to June 2025. Profit margins also experienced a notable improvement, despite some non-recurring gains and losses affecting comparability. The operating profit margin improved from -2.8% to +0.3%, while the gross margin increased from 99.7% to 99.9%. These improvements can be attributed to cost reduction, synergy effects, and year-on-year enhancements in purchase sale, price differential, and operational performance. The shift in net income and profit margins is a testament to the company's efforts to turn its fortunes around. The significant increase in net income and improvement in profit margins demonstrate a positive trend that bodes well for the company's future prospects. The company's financial performance is a testament to its ability to generate positive operating cash flow. According to the financial summary, net cash flows from operating activities have consistently been in the positive range across multiple pages of the report. Specifically, page 7 highlights a significant positive figure of $940,725,426, which is corroborated by other pages such as 17, 22, 62, 63, 69, 70, 137, and 159. This demonstrates that the company's operations are generating sufficient cash to cover its expenses, resulting in a positive operating cash flow. The company's debt level and interest expenses have undergone significant changes. The total debt increased by a substantial amount of RMB 6,357,515,577, with notable increases in long-term loans, RMB 0.15 billion, and notes receivable pledged for borrowings, RMB 51,212,028. However, the company's interest expenses have decreased across various reports, with some instances showing significant reductions, such as a 70% decrease from RMB 309,116,122 to RMB 91,826,378. Overall, while the debt level has increased, the interest expenses have decreased, indicating a potential shift in the company's financial strategy. Management is emphasizing institutional innovation through internal reforms and external partnerships to drive growth. Key initiatives include advancing the 3 Reductions and 3 Enhancements program, increasing tendering and direct procurement, and enhancing labor productivity. The company's cash reserves have increased by 31.12% following a transfer of equity interest in MAANSHAN Limited to Baosteel. Management is also focusing on working capital management and reducing inventory levels. They are optimistic about the company's outlook, citing progress on major projects such as the new special steel project and product structure adjustment of cold-rolled 6-number galvanization line. The introduction of Baosteel is expected to facilitate transformation and enhance core competitiveness. Overall, management is confident in the company's strategy and outlook, driven by a combination of internal reforms, external partnerships, and strategic investments. The company has a history of paying dividends to its shareholders. This is evident from multiple pages in the financial summary, where it is explicitly stated that dividends have been paid for various years. The exact amounts are also provided, indicating a consistent practice of distributing profits to investors through dividend payments. However, there is no mention or indication of share buybacks. Concerns about inventory buildup and supply chain disruption. The financial summary reveals several red flags regarding inventory buildup and supply chain disruption. On page 17, it is noted that there are concerns about inventory buildup, which is further emphasized on page 32, where low supply assurance is also mentioned. The decrease in finished goods inventory on page 116 suggests a potential mismatch between production and demand. Additionally, the significant increase in labor and logistics fees paid to related parties on page 199 may indicate increased costs associated with managing inventory or supply chains. Furthermore, the large increases in receivables from related parties on page 220 raise concerns about potential supply chain disruption due to delayed payments from suppliers. Overall, these findings suggest that there are legitimate concerns about inventory buildup and supply chain disruption, which could have significant implications for the company's financial performance and stability. That concludes the financial summary for MAANSHAN Iron. Feel free to comment below, and I will be happy to answer them when possible.